You might be a business owner like myself who's just recently hit the tax bracket threshold of 375,000 dirhams in revenue, and you're wondering what to do next. So I'll be covering just that in this video. Hello everyone, and welcome back to yet another video where today I'll be discussing and explaining the tax system of the UAE. As you may know, since 2018, the country introduced what is called as VAT, or value added tax, calculated at 5% of the total price of a good or service. This tax is one that is imposed only on goods and services bought from a business and is not the type of tax that is implemented on your monthly income. And thankfully, we're yet to hear anything about income tax. Some other countries do have much higher rates of VAT or income tax as well as corporate tax, but over here, we're just at 5% for the VAT. In addition to the VAT, we also have another type of tax that is called corporate tax or corporate income tax, which has been recently introduced and implemented in 2023. And this one is calculated at 9% of your company's net income or profit. But I'll be discussing only VAT in this video and not corporate tax. However, if you'd like to know more about corporate tax, let me know in the comment section below and I'll make a whole separate video on that. So let's say now you have surpassed the set threshold of 375,000 dirhams. Now what you need to do is to register your company with a valid trade license with the Federal Tax Authority. Because if you don't and they audit you, you'll be handing out a beautiful 10,000 dirhams for late filing penalty, and the more months you delay it, the heftier the fine will be. So be careful and keep an eye out on when you're surpassing a yearly revenue of 375,000 dirhams. Hire an accountant when you're surpassing about 300,000 dirhams in your bank account. I can't stress enough how important it is to hire an accountant, even if it's a part-time one. Now that it's time for you to register, go onto the website of Federal Tax Authority and head to Emirat Tax. On here, you'll have to register with your email address, full name in English and Arabic, as well as your mobile number, or just sign in with the UAE Pass. It's easier that way. Once you've registered your account with Emirat Tax, I would highly suggest you have your accountant or a specialist take care of the rest. Specialists and tax consultants typically charge about 500 dirhams or so to do this process for you and obtain the VAT certificate. This VAT certificate will take about 1 to 2 weeks to be issued, and then you're all set. After this, you're obligated to file for your tax every quarter. You're disclosing with the government how much money you've made in that period. So if you've earned 100,000 dirhams, then the VAT or tax you're going to have to pay is 5,000 dirhams. But you also have a chance of getting some of the 5,000 dirhams reduced by what is called a tax write-off or tax deduction. How this works is that you as an individual or a business also purchase goods and services. So in my case, my expenses would be petrol, camera gear, office expenses, and stuff like that, which I'm also paying VAT for. So I take those costs and their taxes into account and also declare my expenses while also declaring my income of 100,000 dirhams. What this does is we take into account the VAT I've paid for my goods and services and the VAT I owe from the goods and services I've sold, and then by the help of my accountant, we can write off parts of the tax I owe to the government. I hope I made sense. Once you get into it and sit down with an accountant, it'll all make even more sense. But I highly advise for you to keep all your receipts and invoices, especially when you're about to register yourself for VAT, as this can help you out a lot. With that being said, this brings us to the end of today's video. I hope this video was valuable to you and you've learned something from it. Make sure to drop your questions down below, smash the like button, and subscribe for more videos just like this one. See you guys in the next one.